Yo, what's going on, everybody? Welcome back to another video in the Day Trading Institution. So in this video, what I'm going to cover for you guys is time frame correlation. Now, when it comes down to time frame correlation, what we're really just looking for ultimately are for multiple time frames to be in sync. Meaning that if we're going to look to sell, we should wait for the daily and the 4-hour to look to actually take sell positions. Now, what I'm going to be doing is giving you an example of gold and how you could actually use time frame correlation to your advantage. So we already have our main levels marked off, meaning that we have our major supply and demand levels marked off, and we're going to be looking to take trades from these levels. So here we currently have two options on gold. Wait for price to come back up and double top off resistance, and then look to take price down to support, or wait for price to come down to support where we'll look to buy and then take price to 1870, because remember, we're trading from zone to zone. So at this point in time, all this shows us is that price has rejected resistance so far and we're actually pulling back. So price is still very, very bullish, and it's not a good idea to look to take a sell position, especially after a candlestick this huge. We go to the daily time frame and we just see the candlestick is still kind of trending bullish, even though there is a lot of rejection to the upside. This was simply sellers coming into the market, right? So let's kind of continue here, and there's no real details to actually look to trade. Plus, so let me break this down for you guys. This is the sessions indicator, right? Green being the London session, brown being the London to New York session, and then the red being the end of the New York session. So there's nothing to do right now. We're not trading. We're not looking to take trades. Now, we could continue here, and let's kind of just wait for London session. And London session, you know, really this is a very nice double top pattern, right? It's closed under, but we always want to trade as close to the level as possible. So we're not going to be looking to take a sell here. We're going to wait for price to come up here and see what price actually does. So we're still here on the hour time frame. Nothing's changed, right? Definitely lots of momentum to the downside, or lots of consolidation. Still a lot of momentum to the upside is what I meant to say. Right, and we're still going to wait for price to actually come back into our daily level where we will look to take a short, because at this point in time, it doesn't seem like price is going to come down for support. And even if price did try and come down to support, we basically missed out on the sell. Why is this? Because if price were to actually come down to support, then at that point in time, we'd be violating multiple levels of market structure, and the bullish trend would be very weak, which wouldn't create such a great buying opportunity. Now we're still going to continue to wait, and let's check the daily time frame. Daily time frame, as you can see right now, is trading near resistance, but again, it's not enough detail yet just to look to go short, because we had a big rejection to the downside. So we go back to the hour time frame, we see a nice bullish variation pattern, which is an indication price can continue to go up, right? And price went right back up pretty much. Now again, we're still going to wait for that daily time frame to actually come into 1870. We haven't reached there quite yet, but we do have a nice sell signal here on the hour. Is it worth taking a sell? No, not quite yet, because we only have a doji here. So we're going to continue to wait. All right, we don't have enough confirmation just yet. We only have one rejection off of resistance. At this point in time, the best thing for you to do is just simply wait and sit on your hands and maybe trade another one of your pairs while you wait for gold to actually set up. Still no details yet. We're getting closer to resistance, but not quite. And now here we're actually starting to see some rejection. So let's continue and wait for the next trading day. So new trading day, let's see what the daily time frame looks like. Again, price still is not ready to go down. Why? If we would have had a bearish engulfing where we closed under at least the open of the previous bearish candle, then yes, price would look a lot nicer to actually take a sell. But we have only two rejections here on the daily time frame. So we want to wait for the strongest confirmation possible on the daily to verify that we're actually going to continue to go down. Not to verify, but for more of a probabilistic outlook. Now, if we look at this hour time frame, or this 4-hour time frame, price is still maintaining that bullish structure quite nicely. So now that we have an engulfing, price has a very high probability of continuing to trade higher on the 4-hour time frame. So keep this in mind, right? This is a perfect example of time frame correlation right here, right? I don't know why my internet's so slow. I'm going to pause the recording, guys, and when my internet decides to be a little bit faster, I'll bring it back for you guys. All right, everybody. So like I was saying, this is a perfect example of time frame correlation. On the hour time frame, it looked like it was going to continue to go down here. But if you check the 4-hour time frame, what you see is a bullish engulfing. And on top of that, what we could definitely see here is so far price trading higher and higher and higher. Notice how each low is getting higher. Notice how each high is also getting higher as well, indicating that buyers are still in the market. So the probability for price to continue to trade higher is definitely there, and you should be as patient as possible to wait and see what happens when price comes into 1870. Now notice the rejection here. Let's check the daily. Daily is still the same candlestick, so this is within the same day. Hour time frame, great. What this tells us here is that there's a lot of selling pressure in this area, and we're going to continue to wait. And we're going to continue to wait. We're going to continue to wait. Let's check the daily time frame. We're still in the same daily candlestick, so we got to wait for the close. See how that looks like. Again, we're still in the same daily candlestick, so unless this daily candlestick miraculously by the end of the day closes down here, it's still not confirmed that we will see price continue to trade lower. Because really what we could look for is an engulfing on the daily like this one, and then wait for price to actually go down. Right, so let's actually wait for price to give us that confirmation that price is going to trade lower. And again, you know, this is a low probability or a medium probability, my apologies, bearish variation pattern, which at this point in time, there's been a lot of signals here for us to take a sell. I still wouldn't take a sell. You want to wait for that retest, and you want to wait for that strong daily confirmation first, right? Once we see, okay, see, this is why we wouldn't have taken a sell here. You want to wait for the daily confirmation. Sometimes you can get an early entry, but it's not always the smartest thing to do. It's a little bit riskier. Okay, this is a different story. Notice how price actually had a big rejection to the upside and then came back down and closed under resistance. If price can pull back to resistance, then that's when we'll look to take a short, right? Nothing yet. Can we get a pullback now? Nothing yet, and it seems like we're going to have a big breakout to the downside, which we did. Now let's check the daily time frame. The daily time frame, we could see that this day actually formed a bearish variation pattern. This is our signal that, hey, just wait for a pullback and look to actually go short. So on the 4-hour time frame, what you could do is simply wait for price to give you that pullback, give you an entry signal, and then wait to actually take a short position. So notice how price came all the way back into resistance for another retest. This is literally your chance to get in the market. Now we have a bearish engulfing here on this 30-minute time frame. You could take a retest because, again, we're trading off the same level, right? Price rejected this level. This is a sell signal here. You can take a trade off of this bearish engulfing candlestick. Why? Because we're still trading off of that same level. Now, what you have to determine is your stop loss versus your target. I'm going to target my next level of support, which is 360 pips away. Does it make sense to have a 360 pip target and only a 50 pip stop loss? No. You want to be as generous as possible with your stop loss, especially when looking for big trades like this. So in this situation, I'm going to have a 70 pip stop loss, and I'm going to gain 300, and I'm going to look to gain 360 pips. Why? Because we want to give price enough room to breathe, but at the same time, we don't want to be too generous with the stop loss, right? So I'm giving price more than enough room to breathe here, because remember, on the daily time frame, we have the bearish variation pattern right here. Price pulled back and closed under resistance, especially when price does something like this, right? Where we have a big rejection to the upside, price comes all the way under resistance and closes within the bottom third, making it a very strong bearish candlestick. Also notice how price broke the low of the previous daily candlestick, right? Notice how price broke the low of this daily candlestick, but this daily candlestick didn't break the low of this candlestick, right? And notice how each one of these lows on the daily, because remember the wicks show us the low of the day, or and the high of the day. Notice how each wick is getting higher and higher and higher, and then finally we have the break. So we have higher low, higher low, higher low, then we have lower low, right? Now again, there's many ways to look at this and try and confirm this. I'm taking a very aggressive entry here on the 4-hour time frame, because the 4-hour time frame came up, rejected, and that's it, right? What you could do is you can have a scaled in entry where you take a position that's less risk, right? Now, back to the 30-minute time frame. Like I was saying previously, I'm still gaining 5 times my risk here, even with a big stop loss, which is what's more important, the risk to reward. Now, we're going to go back on the 4-hour time frame, press play, and then we have a medium probability bearish engulfing candlestick, which you can take a more safer entry from there. Now we're going to continue this, and let's look at the 30-minute time frame. Now we have another bearish variation on the 30-minute time frame where we see price rejecting resistance again. This is another entry signal, right? That's where you would take another trade. Let's continue and continue. Okay, now notice how, let's go to the daily. Notice how on the daily time frame, price came up, rejected, and closed under here. This is the current day. Price came up, rejected 1870, and then closed right under, showing us again another rejection. Notice how day after day after day after day, price slowly starts to lose momentum. Notice how each candlestick is getting smaller and smaller and smaller, and then we have one big bearish candlestick, right? And then notice how on this daily candlestick it came up to 1870, rejected, and closed bearish. So when you see this happen, what you could do is anticipate a bearish variation to form. All you simply have to do is wait for the pullback and get in on the pullback. Now, if we go to the hour time frame, what we see is that currently this is the London session, right? We have a bearish engulfing candlestick, right? If we go to the hour time frame, well, technically it's the New York session, right? So we know on the daily time frame, we're going to anticipate that bearish variation because the previous day closed bearish. Remember, this previous day closed bearish, rejecting resistance. So we're going to expect the next candlestick to continue to go down. All we're looking for is a pullback to sell, right? The probability is a lot higher. What I see here is here's resistance right here. Notice price come down, come up to resistance, reject again. Come up to resistance, reject again, and close bearish. If we go to a 30-minute time frame, what do we see? Resistance rejected, rejection, rejection, and then another rejection. So we can actually take another entry right here. And we're in the New York session, meaning that there's going to be volume in this session. And we can put a stop loss up here and a take profit all the way to our next level of support. Let's continue. You see, this is why it's important to use stop losses that will allow price to actually breathe. Notice how price came all the way up, came about maybe 70% to where our stop loss is. But us knowing as traders that we're managing our risk, we're able to hold the position because it's not a big risk to us, right? We set our stop loss at an area where we know if we're wrong, that's where we're getting out. And that's where I determined it to be up here. Now, all we're simply going to do is press play and watch. Now let's check the daily. Again, look at the daily time frame. Big bearish variation to the downside. Once this daily candlestick right here closed under this minor level of support on the daily and it closed down here, that's confirmation that, hey, we've broken support. We're going to travel down to 1830. That's the next level. And what you could have even done is notice how we broke under the daily support and we closed under. Look how price came back up to daily support. All you have to do is wait for that engulfing candlestick or the variation pattern, which you could have entered right here as well with an aggressive entry. Why? Because it rejected the 20 SMA and then it also broke support. That is a break of structure. This is a break and retest pattern. You could enter here with a stop loss above, with a stop loss above that level there on the daily and then target that level of support and continue. And then here, you have another bearish variation. This is another entry for you. Let's continue. And then price hit our target. So I really just showed you there at that point in time, right? We've broken under 1830 support. We're at another level of support. You can wait for price to come back up to 1830. Let's see what happens. And it just keeps breaking under. So what you could do is wait for price to come back up into 1813 and look to actually sell because that is our nearest level of support and resistance. But the way this formed right here, I'm not too confident that that's actually going to happen, right? Anyways, guys, just wanted to give you a quick, not a quick lesson, but a more detailed explanation on time frame correlation and bringing all your time frames in together to actually make a trade, or not make a trade, but take a high probability setup. So again, all time frames have to be in sync, right? let me give you another example, right? Just a quick example here. If price is making higher highs and higher lows, and this is the daily time frame, and you see price come back into a previous level of structure, the price is most likely not going to go up until the daily time frame forms that engulfing. Once the daily forms that engulfing at our previous level of structure, that's a sign for us to actually look to take a buy. Now let's try and find this on the chart, even though it's not really okay. Perfect example right here, right? So notice how price actually broke market structure right here, right? Once price broke market structure, notice the retest and close. This is most likely going to be the next day's candle, and it's actually going to go bearish. Just because price on the 4-hour time frame came here and had this bearish variation doesn't mean that it's going to go down right away, right? The daily has to be ready. Once the daily actually closes, and this day closed, you could anticipate that the following day is going to go bearish. And what happened? Pulled back all the way up to our previous level of structure, came back down, retest engulfing. At that point in time, what you could do is hop down to a 30-minute time frame or an hour time frame. You can see price break support, because remember, there's going to be trends within inside of trends. If the daily time frame is overall bearish, just wait to sell, right? Because the hour time frame, the 4-hour time frame, what it's going to look like, it's going to look like a bullish trend. What does this look like, right? Lower low, lower high, low, double bottom, higher high is what it looks like. It looks like it could start a 4-hour trend, right? But we know that the daily is still bearish. Why is the daily still bearish? It's simple, right? Low, lower high, lower low, lower high. So what can we expect? Price to do a lower low. When price, again, there's going to be trends within inside of trends. When price actually is pulling back on the daily, for the daily to make a lower high or a higher low, the 4-hour time frame and the hour time frame are going to have predominantly bullish structure, mainly the hour time frame. So if we go to the hour time frame, we see an entire bullish trend here, right? Now that the hour time frame has broken structure, and the 4-hour gave us a big bearish engulfing, all we simply have to do is wait for a pullback and look for an entry, right? So there's many ways you could have done this, but in this situation, it doesn't really look like we're going to have that opportunity, and it's not even worth taking an entry right here. We're still not going to take an entry, right? Now we're talking, now we're actually starting to have a pullback. Pull back to the SMAs. You can even pull out a fib, but this is probably news, so I'm going to draw my fib from the low, or from the high to the low. We've pulled back about 50%. Let's see what the daily looks like. The daily time frame, it's giving us some form of a pullback. So I'm actually going to wait for our signal to take a sell. No signal. Very weak. Now, notice how price came up to the 618, and notice where it ended. It ended at our previous level of support. And look what it did. Support held as resistance. So what do? You have two options. You could take a sell after this candlestick closure, or you can drop down to a lower time frame and wait for a candle confirmation, which the best thing for you to do is always wait for that candle confirmation, because you have a more, not secured entry, but how do I say this? You have a higher probability of it playing out in your favor, right? So if you would have taken that aggressive entry, most likely you would have been stopped out. But now again, let's coordinate the time frames. Let's align them. Price still closed under our previous level of support, and all that shows us is that resistance is holding. They're still selling pressure. So now that we've identified they're still selling pressure, let's go down to a 5-minute time or a 15-minute time frame and wait. So price, they're closed, right? Still, we're going to wait because we have no real entry. Again, we're still waiting because we have no real entry. No real entry. Now we have an entry. What is this? A high probability bearish variation pattern right here. So what could we do? We could say, hey, well, here we have our previous level of support. Where's our previous level of support? Down here. These are our daily lows and our 4-hour market structure lows. So what could we do? We can go, hey, I'm going to enter now. My stop loss is going to be above this wick here at 64 pips. My take profit is going to be down here at this negative 61.8 extension level where we have a level of supply and the daily time frame lows. Let's just press play and price hit our target pretty much right away. It's not always going to happen where price hits your target right away, but you want to be as patient with your trades as possible because there's always going to be opportunity. If you missed out on this first entry right here, then price came back, engulfed, this would have been another entry here. You go to a 30-minute time frame, you would have seen, hey, there we go, bearish variation, bearish engulfing right here, or an hour time frame. I mean, if you would have waited for the hour, you would have completely missed out on the trade. But it's going to happen, guys. It's going to happen. Anyways, guys, so hopefully you understood time frame correlation. Don't feel overwhelmed. You're only going to get better with time frame correlation with time and experience. Anyways, guys, if you ever have any questions, feel free to contact me in the Discord or just wait for one of our peer reviews and ask me there. Hopefully you and guys have been enjoying the course so far. Like I said, I've been working endlessly on this. I'll talk to everybody in the next video.